And we are live. What's good, Josh and man DL Saint? How y'all doing? How are y'all doing? What is good, everybody? What is good? I wasn't on yesterday. I was tied up doing some other things. You know how it is when you get out of your routine. My daughter's on spring break. She's gone with her mom, and I had to run around and do some stuff. I flirted with jumping on real late. I mean, it must have been like midnight, 1 o'clock a.m. East Coast time, and I decided not to do it. I decided not to do it, but I have been watching what's going on. I have been watching what's going on, and I mean, it is crazy out here, y'all. It is crazy out here. I mean, just Wall Street is like this right now, man. It's shots fired, baby.
Get some! Get some!
Everybody's getting some. Everybody is getting some right now, man. So what's good with y'all, bro? What is good? Brother Jason, I see you, brother Vikings in the house as well. How y'all feeling, fam? Good to see y'all, bro. Man, it's out of control, man. Like this, what was it? Last week we did a show. It was like, hey, is this, Silvergate SVB thing, is this the start of the next financial crisis? Looks like it is. But you listen to the powers that be, they say, no, everything's fine. Don't worry. Don't worry. There's nothing going on here, nothing to look at here. Oh, there's plenty to look at, people. Plenty to look at. One of the things I was looking at last night, um, and yeah, Michael Cohen said, I think he's Australian. He might be living in the States. I'm not sure. YouTuber. I'm gonna link his stuff to the bottom. You know, yeah, I'm gonna link his stuff to the bottom for a team replay because I've been watching him. He's been on this thing since the beginning, since Silvergate. I was watching his brother, just happened to catch him. He was talking about Silvergate, and he's been pretty much on point. Um, and he was talking about a story yesterday having to do with Moody's right here. Moody's cuts outlook on U.S. banking system to negative, citing rapidly deteriorating operating environment. This was the news. This was CNBC yesterday. You know what I mean? It was yesterday morning this article came out. And no one really talked about this. You know what I mean? Like nobody talked about this. Sister Candace is in the house. What's good, love? Always a pleasure to see you. Moody's downgrade. Wow. The American banking system has been moved to negative. To negative. This is the people who rate stuff. You know what I mean? Like Moody's rates things. This is how they get. This is how they get their AAA ratings, or investment, and this and that. Moody's does that. Moody's looking at the U.S. banking system is like, yo, something ain't right here. It's deteriorating. Yo, this is insane. This is insane. And the key points, and this was written by Jeff Cox, the CNBC reporter. It looks like key points to this article: Moody's Investors Service cut its view on entire banking system to negative from stable. So the U.S. banking system, according to Moody's, was considered stable. Now is negative. I wonder who else is negative on planet Earth. Uh, the big three rating firms cited a rapidly deteriorating operating environment despite regulators' efforts to shore up the industry. Now, this was yesterday, right? And this is everything to do with Silicon Valley Bank and that bailout. I mean, people keep saying it's a backstop. Nah, yo, it's a bailout. And here's the thing. I think most people understand it's a bailout. Um, no one's really falling prey to the propaganda, right? I think most, even Americans who know about it, and a lot of Americans don't. You know what I mean? It's funny to me how most Americans don't even care. But most Americans don't have any money, so I guess they're like whatever. But the people with money are paying attention to this. They're noticing it in one way or another. Like they might, they're noticing like, some things are getting expensive. Like borrowing money right now is getting real expensive. It costs a lot to borrow money if you can get it at all. We're going through a shift in our banking system, the way we do business, not just in America, but in the entire world. And we're going to get into that right now. But this article is like, in a harsh blow to an already reeling sector, Moody's investor service cuts its view on the entire banking system to negative from stable. They're talking about the American banking system. The firm, part of the big three rating service, said Monday it was making the move in light of key bank failures that prompted regulators to step in Sunday with dramatic rescue plan for depositors and other institutions. Right. And this was for Silicon Valley Bank, also Signature Bank. First Republic Bank is still doing really bad. They haven't really stepped in yet. There are other banks that are doing really bad here in America. There are also banks in other places of the world doing really bad. We're going to get into that in a minute. We have changed to negative from stable our outlook on the U.S. banking system to reflect the rapid deterioration in the operating environment following deposit runs at Silicon Valley Bank, Silvergate Bank, and Signature Bank, and the failures of Silicon Valley Bank and Signature. Moody said in the report. So they've been watching this for a while. They say, "Well, they having problems," and then the problems went over into full on. Just the banks just failed, and the U.S. government stepped in. But that's not enough for Moody's. They're like, something's wrong. And I think what Moody's has a whole lot of information. They're looking at the big picture. They understand it's not just a couple banks. They understand it's not just isolated. They understand this is their job to look at this kind of stuff. They understand that all of the banks in America have this issue. All of the banks in America. I mean, it's just messed up right now. This is crazy. The move followed action late Monday when Moody's warned it either was downgrading or placing on review for downgrade 7 individual institutions. Seven. Right. And remember back when Janet Yellen was saying that she's watching others. She's watching other banks. When she was asked about this in a meeting, this was last week. It's like there are other banks. Now we know because Moody's is looking at 7. We don't know how many she was looking at. The moves are important because they could impact credit rating and thus borrowing costs for the sector. And that's what's happened today. Today is crazy, y'all. We're going to get into what's going on right now. But Wall Street is all red, y'all, and red is not good. In its downgrade for the entire sector, the rating agency noted the extraordinary actions taken to shore up impacted banks, but it said other institutions with unrealized losses or uninsured depositors still could be at risk. This is a term that we're hearing all over. Unrealized losses. All the banks have losses that are unrealized right now. All of them. In America, all the banks, from the biggest to the smallest, they have been, like we said before, they've been, it's a shell game, it's smoke and mirrors. They've been moving the debt around, moving the losses around. Those losses are unrealized. And what they're hoping is they can kick this can down the road far enough that when we get to a point, 2, 5, 10 years from now, they say, look, we didn't lose anything because we had these bonds. But the problem is the money is in bonds and interest rates have gone up. So they're going to lose no matter what. It's just right now, it's a horrible loss. 10 years from now, maybe it's a more acceptable loss. But they're not fooling anybody except for the, John Joe public. Unrealized losses, you're going to hear this term a lot. If you turn on, CNBC right now or any other financial channel, that's all they're talking about is unrealized losses. The Federal Reserve established a facility to ensure that institutions hit with liquidity problems could have access to cash. The Treasury Department backstopped the program with $25 billion in funds and vowed that depositors with more than $250,000 at Silicon Valley Bank and Signature would have full access to their funds, right? We know all about that, right? So all that happened. That was yesterday. All that happened, Moody's downgraded the entire American banking system. How come that wasn't like headline news? You know what I mean? Like, why is it that should be like, yo, what's going on? People should be scared, right? I'm not scared, but you should be shocked. Like, yo, what's the deal? No one talked about it except for this brother on YouTube. And when you watch Team Replay, look, I'm gonna pin his latest couple episodes below. But it is absolutely crazy what's going on. You know what I mean? Absolutely crazy. So that was yesterday's article. Brother Hayoka's in the house. What's good, fam? Sister Candace, please like the video on your way in. Yes, please do. Please like the video on the way in, y'all. You know, it's just a handful of us. You know, we might be small, but we are mighty, just like that commercial with that poor lady driving her kids to the football game. Mayhem was one of her kids. We may be small, but we are mighty. And she crashed into somebody's car. But why wasn't this front page news? Like, why wasn't this something that folks were talking about? You know what I mean? So it just kind of, it goes to the point that the system doesn't work. The system, as we know, it just doesn't work, y'all. It just doesn't work. And then Sister Candace, headline news should have been that the CEO of Silicon Valley Bank getting arrested for cashing out $3.6 million in funds just prior to the bank's collapse. Did he get arrested? Hey, sis, did he? Because I missed that one. I know he cashed out, and he wasn't the only one. Most of the officers in that company, at that banking company, cashed out, and they paid bonuses to all of the employees and stuff like that, which was already scheduled. Wink, wink. It was already scheduled. And those bonuses hit the day right before the feds came in. The day they came in to take over. Did he get arrested? I mean, what did they arrest him for? Oh, but he should have. And Sister Candace is like, no, but he should have. Right? No, he did not. He should have been arrested for his actions. Yeah, unfortunately, it's not illegal. It's not illegal. Hey, when you control the people who make the rules, you know what I mean? But yeah, you're right. That should have been the headline. And you know, it should have happened back during the housing thing. When the housing crash hit, no one got arrested. It's like 1 or 2 people, very low level people got arrested, but none of those CEOs. And then you go back to the president of Silicon Valley. You know, the president of the United States came out, Joe Biden came out and said, well, all those people they're gonna be fired. We're gonna get rid of all of them. All right. The man paid himself $3.6 million. You're going to fire him. Plus, he's going to get all of them get the golden parachute. They're going to get their package, right? Boom, they're gone. These dudes were working for back in the day, they were with Lehman Brothers. If you go back and look at their history, like these people been around for a minute. They know what the game is. They know how to do this. In other words, they can start another bank or go and get another bank that's like maybe struggling or whatever and do this all over again. They know the blueprint. They know the blueprint. So when they're like, oh, we're going to fire these people and nah, man, they're going to go do it again. And if they're not the top people, they're the people behind the scenes. They're going to go do it again and make some more money because it's legal. It's not illegal. Miss Globe Girl, my favorite sailors in the house. What's good, Shawty? How you feeling? Lady Navoa's in the house as well. How you doing, love? Always a pleasure to see you. I hope you are doing well. We're sitting here talking about what's going on with this. You know what I mean? Lady Navoa's like, they can, but what? It's legal. It's like what they're doing is legal. They're not breaking the laws. There are some people out there who are breaking laws, but these people are just like, man, we know the system. It's completely immoral, but no one cares, right? No. You know, man, it is what it is, man. When I look at the way our system works, not to compare this to dating, y'all know I haven't talked about any dating stuff. I haven't talked any red pill stuff in a while. I've been wanting to get back into it, but this is more important than that. But I do want to show one contrast, right? The same thing applies with that good guys finishing last stuff. They want all of us. They want all of the regular Americans to be the good guys and play by the rules and be moral and not, you know what I mean? And not overstep our boundaries, right? So we losing. Every last one of us are losing. Every last one of us. It's about to really hurt when people start getting laid off. People start to lose their jobs. You know what I mean? When you can't go get a loan, when you know these small business companies about to take a bath because they're not going to be able to get loans to cover payrolls. So they're going to have to lay people off, right? Because we're playing by the rules. But the bad boys and girls, right? They're playing the game for real. These people with Silicon Valley Bank, these people with Silvergate Bank, these people with Signature Bank and First Republic Bank and, you know, and all the rest. Right? There's a Swiss bank that's just in trouble. We're about to get into that in a minute. They're killing it, right? Running the system into the ground and taking a ton of money when they do it. I mean, it's crazy, brother Hayoka. from one created tragic situation to the next. Absolutely. Absolutely. Wonderful 34s in the house. What's good, fam? Late Novoa, yeah, we know you didn't give up. I hope not on loves. It just can. Nah, I mean, it is what it is. No one gives up on it, but you got to play the game that's being played. You can't play the game that should be played. And what I mean by that is, if the rules state that you can get away with this sort of stuff, then you know, I ain't gonna lie to you, man. Y'all know my point on my stance on that. Don't hate the players, hate the game. I see what they're doing and it's horrible, right? But everyone is gonna get wrecked in this. And the people who are playing by the old rules, the people who are, being morally responsible, are the people who are gonna get hurt the most. Yeah, I mean, that's just how that's how I see it. It is what it is, but it's it is terrible. You know what I mean? So there's another story out here. So that was yesterday, right? The downgrade. Moody's downgraded the American banking system, which that really should have been like headline news. But Investor Business Daily talks about Credit Suisse, and this is an Australian bank, right? Suisse stock craters to record low. Europe banks retreat. Weakness spills to the U.S. Right? Or did the U.S. outsource our problems to Europe? I don't know which came first. Now we're into the whole chicken and the egg kind of thing. I don't know which happened first. You know what I mean? I really don't. But Credit Suisse is a Swiss bank, right? And they're a big player in the European banking system. And they unraveled early Wednesday. Their stock falling 25% in early trading after its largest banker said it would not provide the Swiss bank with more financial assistance. European stocks retreated as Credit Suisse stock spun lower. The fresh financial weakness spilled over to U.S. banking stocks, ending Tuesday's brief reprieve, right? So yesterday, like, stocks went up. The Fed did what they did. Treasury did what they did. They did the latest bailout on Monday. Tuesday, there seemed to be a little bit of a rebound. Markets were doing pretty good today. That's all over. That's all over right now. The last time I checked, the Dow was down between 260 and 270 points, which was crazy. We'll pull that up in a second. I have it on my television downstairs, but I can't. It's a commercial on right now, so I can't really see what they're talking about. But it doesn't look good. The chairman of Saudi National Bank, Credit Suisse top shareholder, ruled out further assistance intervention for the Zurich-based bank in an interview with Bloomberg early Wednesday. The news comes after Credit Suisse released its delayed annual report Tuesday. So they delayed the annual report because they needed to get this money and they couldn't get it, which noted material weakness to its financial controls and reporting for 2021 and 2022. So again, they've been over here. Now, I don't know what the rules are in Europe. Somebody might get in trouble over there. But again, they're playing the shell game. They're trying to, try to hide the losses. Let's hide the losses, bro. And it's not working. See, and the bank recorded losses in the past 5 quarters. Revenue declined in 4 of 5 recent reporting periods. Credit Suisse stock declined 68.6% over the past year. Wednesday, 24.5% drop sent shares to an all-time low of 1.9 after diving 28% pre-market. And here's the thing: First Republic Bank over the past 40 hours was down over 60+%. Right, so that's just in the past couple of days. It took them a couple of years to get there. So with this news, the European banks just went into a tailspin, and it's just like everyone's down. Everyone's down. UBS is down 8%. Deutsche Bank is down 8.5%. And this is all on the news. To say that the weakness rekindled selling among U.S. bank stocks, particularly among larger banks with broad international exposure. U.S. banks and financials saw a slight rebound Tuesday as the financial sector digested the regulatory effect to contain the contagion. And they're talking about SVB and Signature Bank. And here it is from Silicon Valley Bank and Signature Bank. JP Morgan Chase stock slumped 4% early Wednesday, while Wells Fargo took a 4.5% dive. Right, regional bank, here it is, First Republic and Western Alliance retreated 14.7 and 6% respectively. Right, regional bank was already down like 60, close to 60%, and it took another 14.7% hit. Again, they're not talking about that because they don't want to show another U.S. bank failing. So they're quietly backstopping them. This is what I'm talking about, man. So this is crazy. That was this morning after rebounding Tuesday afternoon. Beverly Hills, California-based Pacific Western Bank, which had rebounded 33% on Tuesday, tumbled more than 20% after Wednesday's opening bell. So all these regional banks are just getting pounded, y'all. They're just getting pounded. This is how the game is played. Everyone in the system understands that the system does not work. They carry way too much debt. There's no balance to it. There's no place for regular people to go and just have an institution where they can kind of do whatever they do. That it doesn't exist anymore. All the banks are gambling, and they're gambling big. And all the banks right now, they got a lot of losses on the books, bro. They got a lot of losses, and they're trying to hide these losses. They're just long enough to where they can get closer to maturity on some of these tools, these products that they bought. And in these products that they bought at a time when the interest rates were low and the interest rates are up now. So they're going to lose money regardless. And the Fed is supposed to announce what it's going to do tomorrow with interest rates. Are they going to go up 50 basis points? They're going to go up 25 basis points? Or are they going to leave it the same? No one really knows right now. This is the kind of stuff, we should be watching, but we don't. Too busy watching all of the game shows, which I don't even know. There's a show on TV about women and men dating or something. Man, it's crazy. I can't remember the name of it. But that's all I've been seeing advertisements for. Credit Suisse looks like it's down 21.74% on the day. Damn. I just looked down at my TV. That's the big news. Ms. Globe Grill, that's what I thought when comments are made about Nancy Pelosi and her millions, and now she made them millions. Yeah, I mean, think about that. Nancy Pelosi, well, her husband, supposed to be this financial genius. Well, he's a genius because he has all this inside information. He's getting this information from, these big time political people like her, like his wife, the most powerful woman in America. They ain't worried about nothing. Trust and believe they got all their money out of the regional banks and put them somewhere else before all this information hit. You know what I'm saying? Ms. Globe Girl continues, but I gotta be responsible like an idiot. Yeah, like we out here, yeah. But I got a response like I was an idiot. Oh, I see you here. She's like, yeah, you made that, but you got a response like you're an idiot. Nah, you're not an idiot, love. You know what I mean? Like I really appreciate the way your mind works. You know what I mean? I really appreciate the way your mind works. And we're gonna definitely need everyone's mind working on this, y'all, because this is just kind of crazy. So those two articles were going on. Let's see. So I got something here from Associated Press. It's about maybe an hour and a half, maybe 2 hours old. We'll read this. We shall read this. Yeah, and I'm sorry I stumbled over your second statement there, Miss Globe Girl. My bad. But I got a response like I was an idiot. I hope it wasn't me that gave you that response. I don't think it was. Brother Jason, keep your eyes open for new credit card deals and promotions. I don't know, bro. Like they're gonna try to get you to get some credit cards, but the interest rates are gonna be so low and it's gonna be more fees. Like it's the banks are tightening up, and that's what all the talking heads were speaking on today. The banks have stopped lending for, like they've kind of slowed way down on lending, and the criteria to lend has gone way up. So you're gonna have to be wealthy in order to get a loan, and then they're gonna charge you a lot for that loan. So you're probably right about the credit cards, man, because they're just gonna pound the people at the bottom because you need money. Folks are gonna get to the point where they need money, and man, you're right. Be careful with that, y'all. Be careful with the credit card stuff. Damn, this isn't even a full blown, like problem. Like the recession is coming, but it hasn't quite hit yet. You know what I mean? And hopefully it won't tumble into a recession. But stocks tumble on Wall Street on renewed fears about banks. Look at all that, like that picture right there, bro. Look at all that. That was this morning, right? At 10:27 and 55 seconds this morning. That was Wall Street. It don't look better. It's still bad. They got somebody from Charles Schwab talking right now. The Dow is everything is down. S&P is down, the Dow is down, the Nasdaq is down, Bitcoin, Ethereum down. Everything is down. And look, they have a price drop on watches. If you want to buy yourself a nice Pepsi Rolex right here, these are all Rolexes right here. Look at some deals on Rolexes. If you got cash, you gonna find some good deals. Y'all see that? Let's get into this article. New York stocks are back to falling on Wall Street Wednesday as worries worsen about the strength of banks on both sides of the Atlantic now. So it's not just America. You know, the S&P 500 was 1.3% lower in midday trading, while markets in Europe fell more sharply as shares of Switzerland's Credit Suisse tumbled to a record low. The Dow Jones Industrial Average was down 461 points, or 1.4%, at 31,694 as of 11:15 a.m. Eastern Time. After earlier being down as many as 639 points, the NASDAQ composite was 0.9% lower. And when I was watching earlier, this 639 had gotten up at one point. It's gotten up to it was like close to 660. So it is still bouncing around. I can't see where it is right now. I know Bitcoin is around 24,000. Bitcoin's already lost a couple $1,000s today. You know what I mean? It's lost a couple thousand today, and it's still falling. This is crazy. Crestwee has been fighting troubles for years, including losses it took from the 2021 collapses of investment firms. Archegos Capital, I don't even know about that. So they've been trying to survive since 2021. You know what I mean? They probably just it looks like they ran out of time and money. Its shares in Switzerland sank more than 16% following reports of its top shareholders won't pump more money into its investments. And we're talking about the Saudis won't put any more money into the bank. Wall Street's harsh spotlight has intensified across the banking industry recently on worries about what may crack next following the second and third largest bank failures in U.S. history over the last week. Stocks of U.S. banks tumbled again Wednesday after enjoying a brief one-day respite on Tuesday. And I'm telling you, like First Republic Bank and that other bank that they were talking about, I don't know if it was in this article, but the other one, they might be ready to go too. Like these banks might be on a brink of collapse, and it's just America's like, we can't let them collapse this week. I think that's what they're doing. Like we got to prop them up at least 2 more weeks before we let these banks go, and they should let these banks go. The heaviest losses were focused on smaller and mid-sized banks, which have seen as more of a risk to having customers try to pull their money out en masse. Larger banks also fell, but not by quite as much. First Republic Bank, see here it is right here. They're worried about, I think First Republic is going to crash, y'all. First Republic Bank sank 16.9% a day after soaring 27%. Fifth Third Bank dropped 5.8%. JP Morgan Chase slid 4.4%. Fifth Third Bank is out of Cincinnati, Ohio. Man, I hope they don't crash. Much of the damage is seen as a result of the Federal Reserve fastest barrage of hikes in interest rates in decades. The Fed has pulled its key overnight rate to an average of 4.5 to 4.75%, up from virtually zero at the start of last year, in hopes of driving down painfully high inflation, which was kind of working. The inflation, it was working to put pressure on it. It's the S&P 500 in jeopardy of, I missed it. I'm just trying to, I got one eye on the TV downstairs. It says the NASDAQ is on pace for a second positive week in 3. So, you know, it looks like the NASDAQ is turning around, but the Dow is down. 10-year yield slides to the lowest level since February of last year. And sorry about you. I'm just kind of looking at what's going on right now in real time, trying to see if anything has changed. They're talking about crude oil prices are dropping. So yeah, the market's all over the place. They said that tech was doing well, but everything else was bad. Uh, so yeah, and I'll catch up with this, and let me catch up with the chat real quick. But yeah, brother Jason, you might be right, man. There might be some credit card deals out there, but be careful with them credit cards. Brother Mark is in the house. My favorite devil dog. What's good? Shout out to you, bro. Brother Hayoka, a good company is a good company, regardless of the market going up or down. That's a good point. These companies that are failing, they made bad decisions. They had knuckleheads in charge, and that's why these banks are failing. It's not like they woke up and then all of a sudden, hey, the Fed just hiked all these rates. We had no idea it was coming. No, they knew it was coming. Miss Globe Girl, it wasn't you. It was some of the men that were in the chat. Back then, the convo was also about women versus men type narrative. Oh, okay. I mean, it's not that I'm scared. I ain't scared to fight you, Navy. I'll fight you, Navy. I don't care. We can verbally get into it, but normally I try to think stuff through, and I love to have viewpoints that are different than mine. It makes me think, and I love it when I see you in the chat because I know I'm gonna be called on to think. And Ms. Globe Girl, do you think credit unions are any safer? They say they are, I think the credit unions tend to be smaller, and credit unions are more conservative. And a lot of the talking heads were saying, yeah, and I think a lot of people are putting their money into credit unions. I know that Chase, like JP Morgan Chase, has been making a lot of money since last week because they've been going after these big businesses and saying, hey, take your money out of the small regional bank and put your money with us. They were been making them sweetheart deals and helping them out during this trying time. And I think a lot of those big money people are going to go to the big banks. And I think that regular folks like us will probably go to credit unions. I have a credit union I've been with for 25 years. So yeah, I think that's what's going to happen. Credit unions don't tend to take as much risk as these banks. You know what I mean, brother Hayoka? That means consolidation in the banking sector. Consolidation means, they're going to close up. They're going to eat up the smaller banks. So now we don't have any choice. If you want a bank, you have to go with a credit union or the big banks. This should be scary. You want choice. You want a bunch of small banks and stuff like that, so you can have some options to go to get whatever you need. Now you got to deal with the big banks. It's just, bailing out these banks are just wrong, bro. You know what I mean? So we got Scam Life in the house. Brother Dusto's in the house. What's good, fam? Brother Hayoki, even the Saudis are moving away from oil. Lithium is going to power the electric revolution. I hear you there. Yeah, I definitely hear you there. The Saudis, they know they can't count on oil forever. Sister Candace, realistically speaking, how can we implement regulations over these banking institutions from screwing their clients when our own lawmakers stand to benefit from the lack of oversight / consequences? Yeah, we got to send different lawmakers, right? Like we got to change the laws a little bit. We got to do away with all that dark money, right? Citizens United has to go away. You know what I mean? We need regulations. We need to campaign finance reform, right? That needs to happen. If you want people to go to DC and not get bought, then you need to get rid of the money. You need to send people there, honorable people, right, who are going to look out for our interests. Send them there with a mission to change these things. That will definitely take time to do, but it can be done. You know what I mean? It can be done, but it's so much money in DC. You know what I mean? Like Bernie Sanders, I'm not hearing a whole lot from Bernie Sanders these days. I'm pretty sure he's talking a lot. I'm not hearing a lot from AOC these days. I'm sure she's talking. I'm gonna have to go look and see what they're saying. But back to the article. See, the latter factor. Well, I'll just read it from here. I can't remember where I stopped. Higher rates came tame inflationary by slowing the economy, but they raised the risk of a recession later on. Yeah, we all agree that the recession's been here. I mean, the textbook, definition of recession, we hit that last year. But again, they were saying, "Oh, that's not a recession. A recession is this." They try to change it as they go. And they also hurt prices for stocks, bonds, and other investments. The latter factor was one of the issues hurting Silicon Valley Bank, which collapsed Friday because high rates forced down the value of its bond investments. Yeah, they made a ridiculously high bet on the bond investment. It was stupid. They put a lot of money into it, and they had to get that money and pay penalties. So they took a serious loss, and that's what pretty much did them in. The U.S. government announced a plan late Sunday to protect the depositors at Silicon Valley Bank and Signature Bank, which regulators shut over the weekend in hopes of soaring up confidence in the banking industry. But markets have since swung from fear to calm and back again. Yeah, because people don't believe in the system. People don't believe in the system. That's just where we are right now. Yeah, because I'm with Citi, I'm with Chase, and I have a credit union, and I'm thinking I might just put everything in the credit union and just rock with it that way. That's what I ain't gonna lie to you. That's what I'm thinking. The big bank is good when you travel a lot. If you're gonna be overseas, it's just they're easier to deal with if you have an issue. The credit unions and the smaller banks, they make you jump through way more hoops because they can't take the loss as easily as the big banks can. So maybe I'll keep one of the big banks and then I'll use the credit union. But I'm definitely rethinking how I'm doing stuff. So we can all see what's going on here. Like, it's just Americans have lost faith in the banking system, and it looks like the Europeans are starting to lose faith too. So, I mean, when you look at all this, everything is just down. Now, Wall Street, it is what it is. This is what they do. It goes up, it goes down. But now people are really, when they see Wall Street go down, they really believe that, all right, Wall Street is down, and this is just, reaffirming my fears that the banking system doesn't work. So let me take my little money out. And then you get people who have more than 250,000, they're taking that money out. That's what hurts. Those big ticket accounts that are just leaving these regional banks, that's what hurts the banks. And that's what's causing this tumble. And can't say that I blame them. Right? The government came in. America does not have enough money to cover all of the unsecured accounts that are in our banking system. They just don't have enough money. It's a ridiculous number, and the federal government can't protect them all. And I think people are looking at that. They can't protect them all. So what I wanted to talk about here is what's going to get hit next. And I think it's going to be jobs. I think jobs are going to get hit next. I think people are going to wake up with pink slips or layoffs. The government likes to say, like the federal government, oh, jobs are, unemployment is the lowest level and this and that. It's because it's the way that they count it. And I found something on Patrick Bet-David's podcast, PBD podcast. Definitely go check out Pat. They do some good stuff over here. And they were talking about how the government counts these numbers. Again, smoke and mirrors from the bank, smoke and mirrors from the government, right? The true numbers are out there, but you got to go and look at what they are putting out and what it means. So let's look at what they're talking about here.
Presented the way they do, to say it's the lowest in how many years? Lowest in 57 years, 50 something years. Hey, it's the lowest, and this is lowest in that. So, okay. So Barry, if what you're saying is true, and let's just say it is based on the numbers you're giving here, it's BLS. So it's not like you're getting the number from a survey. Then that means the economy is worse than it really is. Is that a fair assessment?
We have less full-time jobs now than we did back in May of 2022. Much of the job gains are part-time workers. Much of the job gains are people working multiple
We have
jobs.
less full-time workers today than May of 2022.
You can look at the
That's not good.
Now, Pat, the next one's going to really blow your mind. Check this out.
And what they're saying right there makes absolute sense. Yeah, we have less full-time workers than we did in 2022. Remember, prior to the pandemic, everything was about the gig economy. They don't want you to work full-time. They don't want to have to pay benefits. Full-time workers get better packages. They make more money. They don't want that. There's no place else to get money. They have to cut labor. That's where the money is. There's no place else to get it. They're not making better widgets. They're not providing better service. So they're just like, all right, You know, now the people who go to college and they have these degrees and they're able to go get these high-end positions, all right, good for them. But even those people, they'll get another job. They're working from home and they're getting 2 full-time jobs. They're working from home and they're working the system the best they can. I don't have a problem with that. As hard as they work, they're still never going to get the big money. Right? And then you got like the average folks. Remember when I was young, I remember back in the 80s, the mid to late 80s and into the 90s, you could go work at some corporation or some bank, right? And you can get hired with a high school diploma and you can work in the mailroom. And now you're working with this corporation. It's full-time employment. You had benefits, right? You had medical benefits, right? You had different perks that the corporation will offer. So you can go and you can get you a job working in the mailroom. And because you're with this corporation, they have programs where you could get into a on-the-job training kind of apprenticeship program within the corporation. It's like, all right, well, you could take courses over here at night school, take these courses, get an associates, right? And then we'll get you a better job. We'll get you out of the mailroom. We'll get you into some other position with another, division within the corporation. Right. And then you keep working, you keep going to night school, you get your bachelor's, and then we move you up into another sector and you can work your way up. That doesn't exist anymore. Mailrooms? Nah, bro. They outsource that work to Kinko's. You know what I mean? Security? Nah, bro. They outsource that work to Pinkerton. You're talking about, oh, well, I remember I got hired as a temp at one of the banks. I think it was Provident Bank, one of the banks in Cincinnati. And I worked in the wire transfer department. It was like 6 people in there. So it was like me and 5 other people who were they were the full timers and they, worked with the bank. And all we did was wire transfer money all over the world. It's not like, Western Union. There's this big book. It was a big process. You had to know certain numbers and you had to know the accounts it was going out of and the account that was going into. All the banks from all over the world had different codes. There was a book like this big and it had all of the banks and all the bank codes all over the world. And people were just transferring money. It could be an amount as small as 500. It could be an amount as I think I transferred some money. It was the most I think I've ever transferred was $3.6 million from one account to another account. I had that job. I got hired in as a temp and, it probably would have hired me on full time if I wanted to stick with it. Right. But the days of working in the mailroom were over. You know what I mean? You couldn't do that. So, and working your way up. So it's all about the gig economy these days. Catch up with the chat real quick. Brother Hayoko, remember the FDIC only gives insurance up to $250,000 regardless of the number of accounts. Right. But they came out and said this backstop means that they're going to guarantee all of the uninsured money, bro. That's what they did. They came out Monday when they, Sunday night into Monday, they said, we're going to backstop. We're going to guarantee all of the uninsured money. That's what they did. They're trying to protect depositors. And what they wanted to do was they kind of wanted to let the bondholders and those people kind of float away or get crushed. But then what they're gonna do all that. So again, that doesn't make sense. What are they doing? This doesn't make sense at all. Miss Glow Girl, I don't even know what to do anymore. Thought I was savvy when it came to my money, but I've lost confidence in everything right now. You're not the only one, sis. You're not the only one. It's again, have yachts and have nots. I mean, if you have big money, you're fine. You'll find a haven somewhere and be able to ride this out. But if you're just starting to come into money, let's say you just came into your first $1 million, $5 million, $10 million, there's a really good chance you could lose it if you weren't savvy with it. Brother Hayoka, so even having 10 million in one account at an institution only gets you 250,000. So don't you consolidate all money in one bank? But here's the thing, bro, because of this thing with Silicon Valley and Signature, they came out and said they're going to guarantee all the money, all the uninsured money. So again, the bank messed up. The bank should go under and people should get punished, but they didn't want those businesses. You had a business like Roku had, What did they have? They had like almost $500 million in Silicon Valley. They had like just under $500 million in Silicon Valley. And only 250,000 of that was guaranteed by the feds. So they came out as like, no, we're going to cover all that. And that is the problem. That is the problem. I agree with you. You know what I mean? People should know the rules. We know the rules. And if you got caught up, you got caught up. It's crazy. That's the American way. See, but it's what they're doing is guaranteed that these banks and these corporations can't lose. No matter what they do, they can't lose. The government's going to take taxpayers' money and they're going to back them and make them whole. That's wrong. You can't do that. You can't let people take risk. Right? It's risk. And when they fall, you're gonna just pick them back up and give them their money and give them more money. Nah, you took a risk, you lost. Bye. You lost. And anyone who was you believed in these people, you lost too. Sorry. If I go play the lottery, I take a loss. If I lose, I lose. I can't go on with my ticket and be like, oh, this is a losing ticket. Give me my original money back. Give me my original $10 back or whatever I spent on it. It doesn't work that way. But that's what they're doing with the banking system. And this is why people are losing faith, because they don't get the same thing. Trust me, if I owe money to the bank, they're going to come. They want their money. I can't be like, hey, feds, come bail me out. Look at what's going on in East Palestine, Ohio. Those people are getting crushed. They get chemical spill. The company who did it, the corporation behind it don't really want to clean it up. They're dragging their feet. Meanwhile, the average Joe can't go into his house. The soil is bad. The water is bad. There's smoke out there. People are sick, and no one wants to take care of them. No one wants to take care of them. Government don't have money to do nothing. But Silicon Valley Bank has some issues, and then boom, $25 billion. Here you go. This is the problem. Brother Jose, like everywhere is short-staffed. Everywhere, they say everywhere is short-staffed, especially here in Florida. By the way, it's 50 degrees down here in Florida, y'all. I don't know what's going on. It's 50 degrees down here in Tampa in the middle of the day. It's like 2 in the afternoon. It's 50 degrees. It's crazy. But yeah, Brother Jose, what's good, man? Good to see you, fam. You know what I mean? And I think that, you know what I mean, they cut them out too. It's a lot going on right now, man. Brother Jose, like they make workers do multiple tasks for the same pay now and less workers. Yeah. Everyone's short-staffed. But people have, help wanted signs, but no one's working. We talked about that. There's a lot of men out there not working. There are a lot of men out there not working. And there are a lot of women coming back to work. They're going to talk about this on it. We're going to continue this PBD thing in a second. And please go and support Patrick Bet-David, man. Valuetainment. There's a lot of good information over there. Please go over there and support them. Ms. Globe Girl, credit unions are insured for $250,000 also, but by NCUA, according to President Biden, everyone will get their money regardless. Yeah, and what gets me with that Biden thing is, in this backstop, is they are protecting the uninsured money. The uninsured deposits is what they're saying. They're protecting that with federal money. Well, if that's the case, then why is it $250,000? It should be like, look, put your money in here and the federal government is going to back it no matter how much money you put in here. Someone's going to have to pay for this. Someone's going to take an L. You know what I mean? Someone's going to take a L. Point blank, period. And it is another bailout. So let's watch the rest of this, y'all.
Now we got all these job gains, right? Go to the very next slide if you can, please, Rob. This one's really interesting. Do you see that chart on the bottom there?
Yes.
That chart on the bottom shows COVID.
Yeah.
But what these are is hospitality and leisure workers.
Right.
This has been the engine of growth.
Sure.
Most of the job gains have come from this category, but it's not real growth. You're just putting these poor people back to work, right? But if you notice, we're almost back to trend. Do you see that?
We're even lower than that.
But eventually, let's say we put everybody back. There's not that much more juice left to be squeezed here, right? And if you take a look at the job openings and labor turnover, known as the JOLTS report, this is job postings.
Yep.
This category last month was down 194,000. So this tells me the labor market's about to take a negative turn.
If the labor, and I'm with you, I'm fully there, and I've been saying this for a few months, where I think that's the number no one's talking about. Okay, but let's go there. your background, for people that don't know your background, I mean, if you've been on a couple other times, we had you on a podcast. Your background, for people that don't know this, you have won the Crystal Ball Award for the most accurate real estate forecaster in 2017. This is through Zillow. In 2019 and 2020. You're the only 3-time, I believe, right? Okay. So you've been able to successfully forecast what's going to be happening. That's kind of what you're known for with that part of your success. You done other things.
And that gives you an idea of who that cat is, right? So this dude is just looking at numbers. He has a team and they just look at numbers and they do this stuff. And they're like, yo, you know what I mean? They're saying, oh, unemployment numbers are low. No, man. If you've been out of a job for more than 5 weeks, they don't count you anymore. They don't count you. So, you know, you got 5 people who are unemployed. 2 of them either go back to the work, get called back to work where they got laid off from or found another job. The other 3 couldn't find a job within 5 weeks, so they just don't count them. They're still unemployed. You just don't count them. Right. And then that thing right there, it was like, oh, you got 115,000 people or whatever. They got laid off during the pandemic. They came back to work. So they said, oh, these are new jobs. Nah, they just got their jobs back. They went right back to work. So now that money has gotten more expensive and credit, it's going to be harder and harder to get money. It's going to cost more money to get bread. Bro, they're going to lose their jobs for real next time. And like, so you're going to have Wall Street is, looking at these numbers like, oh, look, employment is great. You know what I mean? Hey, good news. Everybody invest. Right. Eventually the truth is going to come out. I know down here in Tampa, there's just not enough people working. Everywhere you go, there's help wanted sign. If I wanted to go, I mean, anyone could come down to Tampa right now and probably get themselves a job. You could probably get themselves a job. But it's like Brother Jose is saying, you're going to be working real hard. One job is going to be like working 4. Right? And like the uninsured money, and this is, I wanted to bring up one more thing from this show. We got to watch this part, y'all. They talk about the uninsured money. Let's check this out. Let me see if I found the right spot.
Did you hear that?
Yeah, say that one more time.
Okay.
Yeah. Realistic. They've been living in a payment economy from their car to everything else they've had that has been so artificial because of ZERP. And so now it's all coming home to roost and they're like, 6%, good Lord. And their grandparents are saying, why are you screaming?
I want to show you a scary number. I want to show you a scary number. Somebody just sent this here to me saying,
and well, I'm gonna let this part play uninterrupted. But they were Tom was talking about insurance rates and stuff like that, like 6%. That's not a high insurance. That's not a high rate for a house or a loan or something like that. Back in the 80s, bro, they were double digits, man. A home loan, bro, there was people who were carrying like between 9 and 12, 13% on their home mortgage. Now they have more write-offs and stuff like that. Credit cards were easily 18 to 25% back then. Now they were harder to get. Now I know people are like, that's nothing. You should see some of these credit card rates around here now. Granted, I'll give you that. But for a home loan, like the Fed rate was double digits back then when I was growing up. So for people like me to see interest rates get down to like almost 0, less than 1%, and you got a whole generation of people who are just used to free money. And that's what his point was, there's no more free money. And they don't know what to do. So that was his point there. But let's check this out. This part right here is just crazy what Patrick Bet-David was about to talk about.
Pat, take a look at this here. And this is by Nick James, who's, if you're watching this, you send it to me. So zoom in here, FDIC, a goal all the way to the bottom, what their balance sheet is and how much they're protecting. Right now, the amount of money they have, if you look at that closely, they have $125 billion. You know how much they're protecting? $9.9 trillion. Did you hear that?
Yeah, say that one more time.
Okay.
Yeah.
The FDIC
I got a lot of numbers on this page right
has
there.
$125 billion in their balance, but their insured deposits, the $250,000 on the millions of accounts that are out there, they're protecting $9.926 trillion.
Pat, that's like,
Insured
You okay, Pat?
deposits.
Pat, are you okay?
No, but this is the point. What this is showing is
Nobody's okay. That's
what,
the problem.
What this is showing is the fact that you can't just say, "We got you. Don't worry about it." No, you don't have the money.
Mhm.
You don't have the money. By the way, you may be able to do it for one SVB bank, maybe for a second bank. If all of a sudden you get a third, fourth, fifth, seventh, eighth, ninth, 10th, they can't do anything at that point if this happens.
So you're saying
Y'all see that right there, right? That's the whole point. This is why no one has faith in the banking system. They can't do it. So Silicon Valley Bank and Signature Bank, Fed step in, we got y'all, right? But you look at First Republic Bank and you know 2 or 3 other banks, regional banks, they're going through the same problem. This is why the government wants to sit on this. This is why they don't want people to know that these other banks are going to collapse, because the government doesn't have the money. That was the numbers right there. Those numbers came from the feds. They don't have the money. Look. Right? The federal the deposit insurance fund has $1.25 billion in it. That's how much money they have to protect that $250,000 deposit. Uninsured deposits, all the banks in America, uninsured deposits, 9.926 trillion. These numbers are big and hard to understand, but the number that needs to be backed, the number that needs to be insured, and the amount of money available to insure it doesn't add up. Right? Bottom line, y'all, look at it. This is why Moody's said that the American banking system is trash. This is what's going on. People are looking at the balance sheets and they can see that the system is gone. This system doesn't work. The government came out and said, we're going to back all of the deposits, all of the uninsured money. That's what they said they're going to do. We're going to back all of the uninsured money with taxpayer dollars, right? We're going to do it. Well, how y'all going to do it? There's only $1.25 billion in that account. There's $9.926 trillion of uninsured money out there. Y'all see what I'm saying? Do y'all see it? It doesn't work. Let's say it one last time, bro. I just want to drive this home. The system is broken. The government says they're going to protect and they're going to guarantee all of the uninsured money out there. Not just the $250,000 that the insurance is for, not just that, but they're going to guarantee all of the uninsured money. How? That's what Yellen said. That's what Biden doubled down on. How? How can they do that? All these federal officials are out here saying your money is safe. We're going to guarantee all of the deposits, even over the $250,000. Okay. Where's that money going to come from? Because there's only $1.25 billion in that account available to guarantee the money. There's $9.926 trillion out there that's uninsured. This is the problem. The system failed, and they don't want to let it collapse. And they're trying everything they can to keep it from collapsing. And now tomorrow we're supposed to, they're supposed to announce, the Fed's supposed to announce, and I'm talking about the Federal Reserve, another interest rate hike. I mean, Powell's definitely going to want to do it. But you look at what's going on with the market, still down. When you look at the numbers, there's just no way. They have to create a whole lot of money to cover this. $9.926 trillion. Shout out to Patrick Beck. David, man, oh man, people. And that's the bottom line, bro. The system simply doesn't work. And I don't even believe that they can print their way out of this one. We better cross our fingers and hope that there isn't a run on these banks. And it's all the banks in America, not talking about just the regional banks, not the small, not the medium. We're talking about all the banks, from too big to fail all the way down to the mom and pop banks, all the way down to the smallest credit union. Now, the credit unions don't take as much risk, but the guarantees are for them as well. That no matter what organization it is, Sister Ms. Glow Girl, you're right. The NCUA, okay, FDIC, all right, whatever. It's all coming from feds. It's all coming from the federal government. It's all coming from taxpayers. Basically, when it doesn't work, that's who's gonna have to be, really at the end of the day, that's who's stuck holding the bill, and the taxpayers ain't got it. We ain't got it. We're gonna keep lifting the debt ceiling. What are we doing here? This is why inflation is gonna continue to get bad. Jerome Powell has no choice but to raise interest rates. He has to. He has to. Now, how many basis points is he gonna do it? Who knows? But they're putting pressure on him not to. Just don't raise interest rates this time. Just wait, and then next time you can raise it. Nah, he better raise them. If he's serious, he better raise it. He has to. He has to. And you're gonna have to let some of these banks fail, for real fail. And the people who got their money, it's gone. Anything over $250,000 is gone. Buy Roku, buy something, goodbye to some of these other small businesses out there. Sorry. That's easy for me to say. You know what I mean? It's not your money. Bro, why should you get a special break, man? Well, it could ruin the whole country. The way I see it, the country's already ruined. You know what I mean? They got to raise interest rates. Ayoka said, this seems to push money into the stock market, meaning owning a portion of a company would be better than having it in savings. But I ain't gonna lie to you, man. I don't know what this means. It means the end of the financial system as we know it. They're going to have to do something to change the way they do business. Maybe the system moves too fast now. Maybe because of the internet. Maybe because everyone's so interconnected. I mean, I can pick up a phone and I can close an account right here. It'll take me a couple minutes. Maybe that's the problem. There's no lag time anymore. And we're working on a system that was reliant on lag time. Maybe that's it. I don't know. But it's not just America, it's the whole world. All right, here we go. Great reset. Let them fail. Let them fail. There are people out there with money who can come back and create more banks and do this. Let them fail. Put in place common sense, real regulatory apparatus that keep this from happening again in the future. Right? Maybe raise the amount of the FDIC or whatever, maybe go from 250 to 500, maybe $1 million. All right. The banks are going to have to pay a higher premium for that insurance, and don't allow the banks to pass that on to all the little people. Right. So this might be the opportunity to do that, man. Let it all crash, man. Let it all go. Start over. I mean, what's going to happen now that Europe's in the dark? I mean, it's not like, we're going to go to a different currency. No, you're not. China's tied up in this too. They're going to lose a ton of money. Everybody's going to lose. Go ahead and take the loss. Take the loss. Raise the interest rates. You know what I mean? Let's put some controls back on the system. The system seemed to work back in the 50s, the 60s, the 70s, right up into the 80s. Right? But then we hit the 80s, and that began that whole thing for deregulation. Maybe it's time to regulate the financial system. Let's regulate this again. Let's just make it make sense. That's my take on it. Yeah, Brother Jose is like, yeah, you got to raise the rates. If the rates go back down to 0%, we're done for it. And that's what Wall Street is going to scream for. Lower rates, lower the rates, lower the rates. No, I hope Jerome Powell doesn't. I hope he sticks to the plan. This is going to hurt. We've already gotten into it. Why stop now? Let's keep going. You know what I mean, Brother Hayoka? With the phone, you're showing the power of innovation. That's not going to stop. Right. But the innovation is never going to stop. But we need to understand that the game has changed with technology, and we need to change along with it, or everything's just going to go. Everything's just going to die. You know what I mean? That's how I see it. We need to do we need to do that. We that's what I would say. I would say let it all crash. We're already here now. Let it all burn. And then help those regional banks that survive, help the credit unions, right? And separate Wall Street from Main Street. Let's go back to where there was corporate banking, and then there's like everyday regular people banking. Let's go back to that. Right. Let's get some more. Let's not go to where only banks you could go to, or the too big to fail banks. Let's break them up. Let's do all that. Let's take this opportunity to break up those banks. Let's bring back the smaller banks. Let's bring back the mid-sized banks. Let's get rid of too big to fail. Let's do that. Here we got an opportunity to do that. Let's do it. Because if we don't, there's going to be massive layoffs across the board. Money's going to be expensive, and guess what? People are going to get crushed at the bottom, which is what always happens. This is what always happens. So I appreciate y'all, man. I'm done. I just wanted to get that out. You know what I'm saying? I'm definitely going to be back to do some. We need to do some red pill stuff, y'all. I ain't talking about relationships. I haven't talked about anything red pill. It's a lot going on. I haven't talked about, because now we're just talking about the financial game. We're talking about the banking game, credit game. That's all. Let's get back to, I want to get back to talk about relationship game if we can. It's crazy, man. I mean, this is crazy. I don't see the government collapsing. I don't see America going away. I don't. I mean, we'll see Germany and UK and Spain and Greece and all them go away first. And keep in mind, there's still a war in Ukraine. How are we going to be able, they talking about sending all this money over there. So, I don't know. Maybe we'll have to do another downrange podcast, man, to talk about how does this financial crisis affects what we're trying to do in Ukraine. We're going to have to figure this out, y'all. But, hey, this was fun, man. This was fun. Still got the rest of your day. I hope all is well. Keep doing what you're doing. Thank y'all so much for coming through and supporting the brother. I really appreciate it. I truly appreciate it. And let's keep our eye on this. Let's see what happens. Man, I'm DL Saint. This is I Really Want to Know podcast. I'm going to holler at y'all later. Peace.
Darn, that's the end.